We earn business by being honest, ethical, and having your best interests in mind. Hey, this is Kenton Becker, American Pacific Mortgage. I'm here again with another weekly video tip for you. This video tip that I want to talk about is your loan officer lying to you? Now, there's a lot of ways that loan officers can lie to you, especially ones that are not very ethical. They don't have your best interests in mind. And that is why it is very important that you spend some time up front really researching the loan officer that you're working with. Look up reviews, look up testimonials. You'll be able to see past client experiences, Google, Zillow, Yelp, various websites. This is why it becomes important that you know the loan officer you're working with, because there are a ton of ways that they can mislead you or lie to you when it comes to purchasing a house, and specifically your payment rate and fees. So I'm going to talk about in this tip, number one, how are they lying to you? And then I'm going to talk about what you need to do to protect yourself. First thing in this is that loan officers know that most savvy buyers are going to be comparing options out there. So they know this, and it causes them to maybe do some things to their estimates or their quotes so that they make those quotes look better than their competition. In some of those areas, it's good. Competition is good, and it can lead to better pricing, better rates, or closing costs. And in other areas, it could be completely misleading, and that's what we're looking out for. One thing you need to understand is there is a difference between a loan quote and a loan estimate. A loan quote is given before you're under contract on a home. You receive a quote, sometimes an online quote from an internet lender, or a quote from a local lender, maybe a local bank even. The fees that you see on that quote are just assumptions, they're just estimates. There's nothing binding about those numbers. Sometimes that quote is given before you've even filled out an application, and other times it's given after you've had your credit pulled and filled out an application. It's important to understand that none of the numbers that the lender puts on there, they are bound to, and that they can change between now and when you go under contract on a home. And that's where a loan estimate kind of kicks in. When you go under contract on a home, the lender has 3 days to provide you with initial disclosures, which includes a loan estimate. That loan estimate now has fees on it that are binding. The section that the lender is bound to is called the Section A fees. I'm going to put an image up on the screen. And these Section A fees include things like loan discount points, origination charges, and you may also see underwriting fees or processing fees. These are all the fees that the lender has control over, and once they quote them, they are bound to them. Everything else on this estimate is third-party charges. These are fees that they have no control over and are quoted from other sources. So here's a trick that many lenders will pull on you. They will quote their fees accurately, then they will leave other fees off or quote them very underestimated or very inaccurately. This example that I put on the screen, and I asked the client for permission. I got this from him this week. It was from a very popular internet lender that if I told you who it was, you would know about them. And they received this quote from him, and frankly, I was a little shocked. I was shocked at how many things were left off of this quote that they received from this internet lender. And really, if we were comparing my quote to their quote, those numbers would look completely different. And they did. Their estimate was almost $3,000 less than mine. So on the surface, the client was thinking, wow, Kenton, your quote is $3,000 more than this internet lender. And then I started pointing out some of the things that this internet lender left off of their quote. So specifically, they leave off title insurance. Now, title insurance for this property would be roughly around $900 to $1,000. So that's $1,000 right there that they never disclosed that would come up later on, because that's a third-party charge that the lender has no control over. Now, they also left off about 4 additional months of property taxes that would need to be put on there in reserves or impound accounts. They did include about 2 months of property taxes, but they're short about 4 months in total. And at $400 per month in property taxes times 4 months, That's about $1,600 that they come up short on their closing costs. Some of their other fees are just undercut or underestimated because they quite frankly don't know our market. So they estimate only $550 for an appraisal fee. In our market, that fee is closer to $800 or $900. They're also only estimating about $800 for the escrow fee or settlement charges. Those again would be about $1,000 in our area. So when you start to add those up, that's over $3,000 in charges that they're just completely leaving off of their estimate. Now, let's just say that that client, they didn't talk to me. They just assumed that, wow, Kenton, this lender's $3,000 better on their closing costs, and they just chose to use that lender. Well, what would have happened is they would have got under contract on a home, and then once those fees were confirmed on the taxes, the appraisal, title insurance, escrow fees, those costs would have gone up by probably $3,000 or more, which would have put them either at what I was already quoting from the beginning or even higher than what I was quoting from the beginning. If they were expecting to come into closing $3,000 less, and if that's what they were budgeting for, that's what the money that they had available in their accounts, their bank accounts, to come into closing with, they may have lost the home simply because they couldn't afford the additional charges that were underestimated or not even disclosed. Another way that they can lie to you or try to deceive you, honestly, is with your monthly payment. And this also comes with a couple things: your property taxes and your home insurance. A lot of lenders that I've seen out there will undercut these numbers because they want that monthly payment to look lower than what it really could be. If you're buying in this area, and especially I see this again on internet lenders, they're not familiar with our market. They're not familiar with our property taxes for homes or our home insurance. They're not familiar with what areas homes might be in a flood zone or not in a flood zone. These can have big impacts on your monthly payment. And if they're underestimating, let's just say, for example, that they provide you with a quote and they put down the property taxes at only $200 per month. If our area has generally property taxes around $400 per month, you're going to look at that payment and say, these guys are better. Wow, their payment's $200 less than yours, Kenton. Except I'm from this area and I know what property taxes are supposed to be. So I'm quoting the correct property taxes and an accurate monthly payment to what you would have. And their quote makes it look like it's actually lower than mine. The reality is, when you go under contract on that home, those property taxes are going to go up because now you're under contract on a home, and that payment is going to be either equal to what I quoted or possibly even higher is what I typically will see. So this is a trick that the lenders will play, whether they're local lenders, whether they're internet lenders or local banks. We see it all the time. Okay, so enough on some of the lies that the lenders can say. Yeah, you gotta watch out for this. And that's what I wanna talk about next. Let's be real, just knowing where this stuff comes from, knowing what to look for, that's half the battle. Now we want to actually be proactive about it. So here's what you need to do. Number one, make sure you request full payment estimates up front before you put in an offer. You should expect that that full payment estimate lists out all the closing costs, lists out all of their fees that they have control over, like points or underwriting or processing fees, and it lists out other third-party services like taxes, insurance, lists out title, escrow fees. You want to see all those fees on your estimate. The other thing is, if you're comparing lenders, make sure you're comparing apples to apples on what they're showing. If one lender is showing these taxes or this insurance, make sure the other lender is showing similar taxes or insurance. If this lender is saying, hey, you're gonna have $400 in property taxes, make sure that this lender is not showing you $200 in property taxes. Line by line, they are similar and there's not one section that's off compared to another. And then also do your own research on what the area you're looking in has for property taxes or homeowner's insurance so that you have a better idea. So there you go. There's a few ways that you can kind of protect yourself. I just go back to this. Look up reviews and testimonials for your lender to make sure that you're working with an honest and ethical lender. Doing that will avoid 99% of these issues where a lender is not honest, they're not ethical, and they try to mislead you just to earn your business. That is not a way to earn your business. We earn business by being honest, ethical, and having your best interests in mind. Hopefully you enjoyed this tip. If you have any questions, comment below or reach out to me. I'd be happy to help answer them for you. Thanks so much for joining me. Have a great week.